Welcome, everybody, to another episode of the Ag View Pitch. We're heading into a new marketing week, the 14th through the 18th of October. We're already getting close to halfway through the month. Joe Vaclavik's with us today. Joe, how's it going?
It's going good. So we're halfway through October almost. Harvest is are we halfway done? Soybeans are definitely more than halfway done. I don't know about corn. We're getting there.
Yeah, things are going good. I mean, it's fast, and I think you had a title on your stuff a week or so ago, Fast and Furious or something, and that's very true. That's
Yep.
kind of what's happening is this
Yep.
thing going really fast. One thing I want to say too before we get into this real quick is just to mention everybody that is thinking about the AgView Executive Business Conference, make sure that you get signed up if you are going to go. We still have slots yet, but once that allotment is full, it is full. And so I know guys are busy and stuff, and try to get signed up if you are, and get on our website, the iView Solutions website, and you can get signed up there. And Joe's going to be one of the presenters there, bringing us some wisdom. So we're looking forward to that in Florida on the 22nd through the 25th of January. So, and
I'll be there. I don't travel anymore except for this meeting. So this is the not that I'm a big attraction by any means, but this is the only chance you get.
yeah,
If you
well,
want
that's
to you want to come shake hands, it's the only chance you get.
yeah, and it's a great way to network too. I think you
Oh
saw
yeah.
that, Joe. I mean, people meet people that you're going to be friends with for life, and you're going to have new acquaintances, and you're going to meet people that you saw last year if you were there prior years and stuff. So it's
Yep, for sure.
cool. Well, again, back to what we were talking about. I think, the Fast and Furious thing is a real deal. One thing I've noticed in our operation is the early planted stuff is super good and it's
Hmm.
super dry and it's coming out really quick. I think there's a lot of areas, we were pretty wet in the spring and people are kind of remember and kind of don't, but some of this later planted stuff is is yet to happen. And I think the yields from what we've seen in some of this later plant stuff is really good also. I think there's, the obvious areas where stuff's not as good, but this crop, talk a little bit about, I guess what I want you to do is talk a little bit about last week's report and how that relates to the reality of what people are figuring out in the field, I think, too.
Well, USDA on Friday confirmed its prior ideas that we've got big yields. They raised the corn yield a little bit. They cut the or soybean yield projection by a little bit. But as far as the market goes, I think the U.S. production story is largely an old story. I mean, usually it's an old story by the time August rolls around, really. Your big prime time weather market, let's trade the yield type stuff. That happens in June and July and a little bit into August. So I think the trade is going to move past that. I mean, there's room for changes certainly in the future, and maybe they do change slightly, but the trade is now looking at other things. The trade's looking at demand, the trade's looking at South America, the trade's looking at China stimulus, things along those lines. Just the things that the market is focused on, they've all changed. And pretty soon it's going to be, 2025 acreage, things along those lines. So you got to kind of think forward and not so much backward because for the most part, the 24 growing season is behind us.
Mm-hmm. Yeah, I think the frustration for some of the people too is, we talk about how big the crop is, but there are areas also that the crop's not wasn't terrible and crop insurance is kind of covering those guys where it's
Hmm.
bad, but there's those people in the middle where, their yields are just good enough, just a little bit below APH. I think that's a frustrated area, but I want to recognize that because I know there's people listening that they're tired of hearing how big this crop is
I
in an
know.
area where it's kind of it's okay, but it's not great. And so so we feel for those areas. But one thing I want to ask you is, um, with the extra bushels from your perspective that are out there for these guys that didn't price those extra quote unquote bushels that they're finding out that they really can't store those bushels, what are some of the things you're thinking about that they may want to do? I mean, because it really doesn't make, and you and I have talked about this on your program a lot, that it really is hard to justify commercial storage or anything. Are guys okay just to go dump the rest of those bushels at these price levels, or what's your thought?
It's an impossible question to answer. So, I mean, you got two options. Are you going to continue to pay interest and potentially pay commercial storage and hold grain into a carry market, which typically rewards the forward seller, or um, you just go sell it at a loss? I mean, it's tough. It's really tough. It's the only way that this could have been remedied would have been with aggressive forward marketing, and even the aggressive forward marketing marketer, if your corn yield was 20, 30 bushels better than what you had thought, you still got a lot of extra bushels that you don't know what to do with. So, I mean, you got to consider the mathematics, I think, on your own farm more so than anything. Like, what does it actually cost you to hang on to grain, for a month, 2 months, 3 months, maybe figure it out on a cents per bushel basis per month, something like that. You've got to at least know what the implications are, and not just be totally blind or ignorant to what it's going to cost you effectively.
Mhm. I think one of the things that's frustrating to people is, the basis, even while the price, we've seen a pretty decent sized rally. If you think
Hmm.
about it, you go back to where the lows were and where what we've seen. But at the same time, basis was decent early on, and now the basis in a lot of these areas is really starting to get crappy. I think that's a frustration for a lot of people too. It's like, well, I've given up a bunch of that. Any
Hmm.
suggestions on managing that basis or navigating that at all, or any thoughts?
Well, we're at a point right now where seasonally basis should probably be at its worst. And that doesn't mean it can't get worse, but it's supposed to be pretty bad right now. You're not supposed to have good basis smack dab in the middle of August. I mean, I typically like separating the futures portion from the basis portion when marketing. I mean, I usually like to start with the futures portion. Usually like an HTA is where I start, unless you're in a situation where you can get a good cash price right off the bat, in which case you do a cash contract. But I mean, if you have to sell, doing an HTA for December or March is probably not a terrible route to go. And then just watch the basis like a hawk. And if you do get some improvement, that's where you got to lock it and you got to have a game plan. I don't like basis contracts. I know that's the opposite of what we're talking about here, but I typically, just as a grain marketing practice, I think setting the futures price first is best practice.
Yeah, and I think there was a fair amount of basis contract set too, so people are going to have to navigate
Oh
that
yeah.
from what I've
Oh, we're
seen.
gonna have the same thing as last year. I mean, you're gonna get into this period late in November when the December basis contracts come due. You're probably gonna have a lot of selling pressure, and a lot of them are gonna be rolled again. It's gonna be similar to last year.
So it's likely that if that's the case, then we could see some huge price pressure at the end of each month for a while. That would.
Yeah, it's very possible, and that's what we saw last year. And that's not to say that I'm bearish the market necessarily. I'm just saying that the odds are kind of stacked against you with these carries and the interest and the cost of commercial storage. Like, you need a hell of a rally to offset that. It's not just like a 15-cent rally. Like, you need a sizable rally to offset a lot of those costs associated with storing grain.
Right. I want to shift gears a little bit here and ask you a little bit about the funds. They're obviously have changed the whole setup. Are you
Hmm.
hearing anything, or do you have any? I don't think you have a crystal ball, but what do you think what are the funds thinking? Because that has such a direct impact on our situation and things that we have to navigate. Any thoughts on what they got up their sleeve next?
Well, you've got now what I would call just a non-consequential fund position across the grain markets. As of last Tuesday, funds were short only 35,000 contracts of corn. The peak fund short was 356,000 back in July. So they covered 300,000 contracts plus worth of corn contracts. Same thing with soybeans. They're only short 19,000, short 31,000 contracts of SRWE. This is just a non-consequential position. So your big short covering event has come and gone, and now they're in a neutral position. The market's a little more balanced. We've seen a rally off the lows. Is there enough here fundamentally to push the fund sorts towards some sort of big net long position in the markets? I don't know that I see it right now, but it could be around the corner. I mean, South American weather issue. Say something happens with this Chinese stimulus and they start buying a whole bunch. I don't know that I'd bet on that, but you probably need something else here other than what we know right now.
hmm What about on the demand side? I mean, obviously, that's what we're going to need to get ourselves some kind of price strength. At some point, you got
Hmm.
to have the fundamental activity. Is there any fundamental activity or anything that we can have for some hope, in the next few weeks, months, looking out ahead? Anything that you're hearing, seeing?
Okay,
Um,
so as we start the trading week on Sunday night into Monday, the biggest headline that I'm aware of is this Chinese stimulus headline. So going into the weekend, we're taping here on Saturday morning, but going into the weekend, there was a lot of chatter that China was going to come out on Saturday and unveil an exact number with regard to this new stimulus. And they came out, but they didn't say anything about numbers.
Mm-hmm.
So this is something that hasn't been traded yet because the markets were closed. But China essentially, this is from the Reuters piece. China pledged on Saturday to significantly increase debt to revive its sputtering economy, but left investors guessing on the overall size of the stimulus package. Some of the analysts interviewed said that the press conference was strong on determination, but lacking in numerical details. That's a negative factor to start off Sunday night into Monday morning, that China did not pin a number to this thing. There had been some rumors that it was going to be, I think, $280 billion was the talk, and they came out with nothing, just some rhetoric essentially. And now we're going to have to wait at least a couple of weeks, the way that it sounds, for another meeting so that they can actually put a figure on this. So very short term, like this next week, I think the fact that they came out with no details is maybe a little bit negative.
Mm-hmm. Interesting. Any other hopeful things on the demand side? I mean, we talk China all the time because they were our biggest customer. They might not be our biggest customer anymore. Is there
Yeah.
anything else out there short term? And by short term, I mean in the next year.
Ethanol production is very good. We are running it's at least a couple percentage points ahead of last year's pace with regard to ethanol production, and we're only a month or 5 weeks into the marketing year. But if you were able to hold that pace, that's an extra 100 million bushels of corn demand. If you're able to hold that sort of pace and stay a couple percentage points ahead of last year, and that would eat into your carry out a little bit. It's very helpful. On the soybean side, I have trouble finding anything really friendly. The export number is the problem. The crush number is projected to be record large. We're going to crush a record amount of soybeans this year, and we do have some new plants coming online. Maybe USDA could be a little low there. I just don't know if it's going to be the needle mover. Just the export piece has been so sluggish that it's hasn't the larger crush hasn't been enough to offset these big crops and what we've lost in export. So I have a tough time without a major Brazilian weather problem. I have a tough time seeing the exports and soybeans improve a whole lot. But weather is a big deal, and you could run into a weather problem in Brazil. We're not that far along yet.
Mm-hmm. Interesting. So I'm kind of bouncing around, but I want to come back now that we've kind of hit. Or is there anything else? Let me back up and say, is there anything else on the big picture macro stuff that we need to be paying attention to in the next couple of weeks as producers?
Inflation is over for the most part, as
Mm-hmm.
at least in the eyes of the policymakers. So in the eyes of the Fed, the way that they view inflation is basically on an annualized percent change basis. So the CPI report was out this past week, and they told us that CPI is up. Consumer Price Index is up 2.5% versus the same period last year, which is very close to their target. Now, everything that you buy is still 20 to 30% more expensive more than it was prior to COVID. So make no mistake, the prices of things aren't coming down. What they're saying is that the trajectory of the slope is not as steep as it was. Things are getting more expensive, but not as rapidly as they had been, and they're comfortable with that. So the Fed is now in a cutting cycle, and they're going to cut rates. The thing about it, though, is that the Fed only controls the short end of rates. They control the overnight borrowing rate, essentially. The longer term rates, like that you guys may use to say buy land or even operating notes, which might be a year, 2 year, those rates haven't come down a whole lot. In fact, some of the longer end rates have come up a little bit. So you'd love to see lower interest rates. You'd love to see lower borrowing costs. I just don't think you're going to see it anytime soon. It's not going to be a 2025 thing. It might be a 2026 thing.
Mm-hmm. It's going to be interesting at our conference. We've got an official from Farmer Mac that's going to be there. So
Mm-hmm.
we'll get some perspective from, kind of what they're looking at in terms of the future there.
You have seen, I will say, like, so are funds going to come in, or somebody can come in and buy corn and soybeans because they believe inflation is returning? I don't think so. But I do think that some commodities like your precious metals, your golds, your silvers, things like that, I think they've rallied partially on currency debasement. I mean, we've created so much money, and now you've got the Fed cutting rates. I think that it plays for some items. I just don't know that it plays for corn or soybeans. I think it's a stock market thing. I think it's a gold and silver thing. I think it's maybe a real estate thing. I don't know that it's a soft commodity or grain market type thing.
Hmm. Interesting. Okay, so we kind of covered the micro, some of the practical things on the farm guys need to be thinking about. We've talked a little bit
Hmm.
about some of the big picture issues. I want to circle back now a little bit. A lot of guys do roll the soybeans off the combine,
Sure.
but there are those listening that are storing some soybeans too, and they're storing some corn. If you have to make a decision as you wrap up harvest, what do you want to hold on to more? If Joe puts his farmer hat on, are you more comfortable hanging on to some soybeans for the future, or more comfortable hanging on to some, corn versus soybeans type of thing?
Honestly, I'd probably split it down the middle. I'd do a little bit of each.
Mm-hmm.
I will admit that I believe, based on what I know right now, that the corn market fundamentals are much stronger than the soybean market fundamentals. But the soybean market can do goofy things. Like if you run into a week or two of dry weather in Brazil in late November, beans could rally $2.50 a bushel on that real fast. It could happen. I mean, Brazil is supposed to account for, the number is 58% of all global soybean exports this year. So if there's even a perception that there's a problem, even though the fundamentals right now look super bearish, if there's a perception of a problem, you could see a Brazilian crop scare event similar to what you'd see here in the United States during the U.S. growing season in July or August
Mm-hmm.
with regard to soybeans. So you can't say that a bean rally is impossible just because the fundamentals as USDA presents them look very bearish. Because as soon as that perception change, USDA doesn't even have to acknowledge it. People think the government controls the market. They don't. If the trade sees a dry forecast during the heart of the Brazilian growing season for 2 weeks and it looks threatening, the bean market's going to rally on that without USDA saying a word. That's just how it works. So I can't, even though that the corn fundamentals look friendlier to me, the soybean thing could change like that. I mean, you just a couple weeks of dry weather and perceptions change.
Mm-hmm. Well,
So you
it's
can't
really,
you can't say, I don't know that I can say that one is better to hold than the other. I don't know that I can say that.
mm-hmm. Yeah, interesting. I think your point is well taken that, November and into December is when it's a weather market though, but that's probably the time a person should have some targets in. If you are holding on to soybeans, maybe having some
Yeah.
target $1.50 higher or something like that in, because those are probably only going to last a few minutes too, right? I mean, they're
Yeah,
not like
I
it's going to
can't
sit there.
I cannot overstate how important the Brazilian growing season is with regard to soybeans, and it gets more important every single year because they produce more and export more every single year. So as the years go by, it's like we have two big weather markets in soybeans now, where it used to be one. So, if your practice when it comes to soybean marketing used to be, hey, I'm going to forward sell or sell on a rally in June, July, August during the US growing season, you've now got to say, also, I'm going to sell during November, December, maybe early January on a Brazilian weather issue for the exact same reasons.
Mm-hmm.
Because supply scare events most often are great marketing opportunities. Not always, but most often.
Mm-hmm. Yeah, I think that's a good thing for people to pay attention to. That's really good perspective. Appreciate
Yeah.
that. Anything else that we haven't hit on? We don't need to keep this too long, but I wanted to, give you kind of the last word. Anything that, in the next week or two, as guys continue chewing away at harvest, that you guys are watching or that you think people need to pay attention to?
One of the things I've heard you say over the years, which is very important and very real, is that, guys are busy trucking, combining, whatever. Those are jobs that you can pay somebody $20 an hour to do. Don't neglect your marketing during harvest. Don't totally forget about it. Like we just had a nice rally in the grain markets. There were some opportunities there, smack dab in the middle of harvest for the most part, that I think a lot of people probably did not capitalize on, maybe the way that they would have if it happened not during harvest. So just think about where the money's actually made. I know it's probably more fun for you guys to drive the combine. I get it, but that's not, from a business standpoint. That's it's a concern, but the marketing is maybe your bigger concern, or
Mhm.
maybe it should be.
Yeah, and it's like you said, it's not just the flat price sales either. It's navigating basis, it's communicating with the processors and the elevators, and like you said, it's just running the business as opposed to running the
Yeah.
combine or running the grain cart, type of thing.
And
So
it's difficult. I understand a lot of you guys wear many hats. You're a farmer, you're you're the marketer, you're the business owner. Like it's tricky to stay on top of all that. I get it, but you've got to stay on top of it.
Yeah. And I would agree wholeheartedly with you. I was in a semi all day yesterday and I got nothing done except driving that semi all day yesterday. You're not supposed to be on your cell phone. I mean, you get if DOT catches you even touching your cell phone, you lose your CDL. So
Yeah.
um yeah, and I got nothing done except driving the truck all day. And my
Hmm.
sister was checking on me on something and I said, I feel like my my intelligence is slowly going away every load I haul. So, but
Yeah.
the problem is those things have to be done, and labor is an issue now too. Ever since COVID and stuff, I mean, labor has just been a major pain in the ass in terms of trying to find good
Yeah. I'm
people.
not saying it's easy. I'm not
Yeah,
saying it, but if you want to be good at something, it's not easy.
yeah, and the marketing and managing your business is exactly like I said, it's where the money is
Yeah,
made.
stay on top of the budgets, like especially this, and this is a deeper conversation that I think we're going to do on Monday, but like overage bushels, like you got to start punching those into your budgets and figuring out, what does that mean? I mean, I
Mhm.
know, like you said earlier, the yields aren't great everywhere, but I'm getting a lot of yield reports. Joe, my corn's 30 bushels better than what I thought it was going to be. Okay. You
Yeah,
need to adjust your budgeting and your marketing plan accordingly. You need to start punching those into your spreadsheets and trying to figure out like what the implication is. It's probably going to raise your, probably going to lower your production cost, which would be good. And that might change your marketing decisions a little bit.
right, sure. Well, it sounds like we've had a good conversation. If people want to get a hold of you, I would guess a high percentage of the people watching the AgView pitch and our market outlook every week listen to you. But if they don't, what's the best way to check you out? Because I know and a lot of times I talk to people and they're like, "Oh yeah, I listen to Joe every day on YouTube." But the really good stuff is your subscriber information. Talk real quick about that.
Well, so we do two different things. I basically my entire job now, for the most part, is pumping out information. The podcast, Grain Markets and Other Stuff, is on, and it's totally free. It's podcast. It's on Apple Podcasts and Spotify, and then we have a YouTube version that's I think the most popular version. But the paid stuff, the free stuff that we do is a news show for the most part. We'll run through the headlines for a given day, and we do a new episode every day. And I'll kind of comment on the headlines, provide some color. But the premium videos that we do are related to grain marketing, specific grain marketing recommendations, cash grain marketing, things like capture and carry, things like budgeting, policy, biofuels. That's where the good stuff is. That's where the information is. And yeah, you got to pay to get it because that's my business now. But if you go to standardgrain.com and sign up, get on the email list, it's become a really popular thing. It's become a whole new business for me. It's basically my whole business now is doing this premium content. So start with the free stuff if you want to check it out. And I think the premium stuff would benefit you.
Yeah, for 50, excuse me, for $50 a month, it's I've had my I think maybe told you the last time my son-in-law or excuse me my nephew came up one day and he'd been listening to you and he's like, that is so cheap for the information we get. He's like puts a video out every single day that has really good information. He's like that's very inexpensive for the work you do. And I think I just want to give you kudos because the amount of work you put in to doing these videos every day, if anybody else had to do that, you would realize how much work it is too, because it's not something that's simple to do. You put a ton of work into it and it really adds a ton of value to our operations. And we
Oh, it's
appreciate
more than a full-time job. I mean, it's life.
it.
That's
Right.
doing content is life now, essentially. I mean, it's way more than a full-time job. It's paying attention to headlines and news and just the ebbs and flows of what's going on in the markets and elsewhere day in and day out and weekends and nights and everything else.
Yeah. Well, we really appreciate it. It's great content, great information. And if people aren't subscribed, definitely do it at least for a month. Check it out, and you won't quit. You won't quit listening. It's great stuff. With that said, hey Joe, thanks a lot for your time today. Really appreciate it.
Yep. Thanks for the invite, Chris.
Yeah, you bet. Thanks everybody. And one thing I want to say is get your rest. We've had I don't know how many days now, like 20 some plus days in most areas without any rain. Everybody's working hard. Everybody gets tired. Be safe. Take your time and get your rest. If you don't get a rain day, just make one. Just shut stuff off and go be with the family and enjoy yourself and then go back to work. So with that said, thanks everybody. We'll catch you again next time on the AgView Pitch.